Welcome back everybody to the Nomad Hedge. In today's video we're going to take a look at the S&P 500 with the ticker symbol SPY. The question we're going to answer is how much left we still have in this market. So I've been a little bit repetitive here, but I'm going to walk you through how I perceive this market. So when we take a look at the wave count here, I know that it can be a little bit messy, but as you can see, we do have a wave 1 here and a wave 2. And then we concluded here after subwaves, wave 3, 4, and now within this channel here, it looks as if we are moving towards this wave 5. And so wave 5 within this minute degree will then conclude the bull market that started back here in April this year. And so we're looking for this entire move here to correct, meaning we will get an 8 to 10% correction. Perhaps we're looking towards this 233 EMA on a daily chart, and that could be an area where the S&P 500 finds support after we have finished off the correction. And basically, if we're getting a correction, it will then set the stage for a minute degree cycle to begin, and it will look basically something along the line of this, and that's going to push us higher here towards new all-time highs. But when I take a look at this wave count here, and some events that we could be looking into next week that could trigger a catalyst for the market to perhaps sell. Okay, so what do we have next week? Next week, we do have the interest rate or the Fed rate decision. I believe that's going to be on Wednesday. Okay, and then on Thursday or Friday, we're going to have the core PCE. I could look at these two events and say, well, maybe that could be a trigger here or a catalyst for the market to react. Okay, so we could be seeing some profit taking, and that could potentially trigger a sell-off, and the market could be breaking down from this channel, setting the stage then for this to correct. Okay, now when we take a look at this wave count here, it's important to understand that where we are currently. Now, I could make the case that wave 3 concluded here, or that wave 3 concluded here. And so the reason why I say that is because if you take a look at this wave count here, that's wave 1 of sub-minute degree. The sub-minute degree could have actually concluded here. If that gives us wave 5 then of the sub-minute degree, then wave 3 of the minute degree has to conclude right here. So that is why I'm a little bit cautious here. And the reason why I'm cautious is because if you take a look at this move here, the fundamental rule of Elliott wave is that wave 3 can't be the shortest. Okay, so if we drag this one here, that gives us approximately 683. If the S&P 500 goes above 683, it would invalidate this wave 3 count here. And then we can take a look at this wave count here and say, well, perhaps wave 3 of sub-minute degree actually concluded right here. And then the wave 5 of sub-minute degree concluded there, meaning wave 3 concluded here. But in the end, it doesn't really matter. What matters is that wave 3 can't be the shortest. But then when we take a look at the wave count for wave 5, I mean, the target for wave 5 is typically the same length as wave 1. But because the S&P 500 is an ETF, we can't really look at that and give it the same kind of status as an equity or a stock. So the safest bet is to actually look at an extension from wave 3 to wave 4. Typically, we're looking at this 1.618. And if you take a look at this channel here, that could trigger a throwover. Okay, meaning it goes above the channel. Basically, what happens here is that the institutions, the big money, they push the price highs here and they trigger all the short sellers, the stop losses for the short sellers. They grab the liquidity and then they begin to sell. Okay, so the 1.618 here is a strong candidate, despite the fact that we looked at wave 3 could have ended here or here. It doesn't really matter. If the S&P 500 breaks above this channel, maybe retests it and moves higher, then we could be looking at something along the line of this. Okay, so we get a strong wave 1 and then we have a wave 3, and so we're looking at an S&P above 700. Okay, so maybe it's a little bit far-fetched, but we can give us a hint where this market is going by taking a look at some of the indicators here. And as you can see here, we have the RSI, and the RSI is basically already showing us signs of weakness. And how do we know this is weakness? Well, we know because price is going higher, but the momentum has slowed. Okay, so that's one sign that this could be wave 3, but since we have a negative divergence right here, this could also be wave 3. So both are good candidates here, but because this wave 3 here, this price at this level had the highest momentum. See, this is the strongest momentum here. That's why it also gives it a strong candidate for being wave 3. But then if you take a look at the money flow indicator, that would suggest otherwise. All right. So then you have this area here with the highest momentum here. Either case, we're looking at this one or this one. So if it breaks above 683 on the SPY, it invalidates this level. Then we can say wave 3 is here. And then we can take a look at the extension here at 1.618. So this is basically how we view the market. And if we move on to a weekly chart of the S&P 500, we can see here that we are still above the 8 EMA. Okay, so the 8 EMA here, it's this cyan line here. Okay, this blue line here. So as long as we're above this thing, you shouldn't really be worried about being bearish at all. This is a very strong indication. I mean, see how many times we've tested this level? It's just screaming bull here. But let's just say if we would get a pullback here, we're looking at that 8 to 10% correction. And so basically that would just be a retest of the former high here, which is right here, right? That's the former high. So if we can get a retest here, that would be in line with a 10% correction, which is fully normal. Another thing to highlight is that we are soon moving into November. November is one of the strongest months in the stock market by historical means. If you take a look at every month in November, even post-election, the second term of a presidential election, if you stack up all the data, the month of November is one of the strongest months for the stock market. So if we're going to get that correction, we better get it very soon. I know the data is a little bit skewed sometimes. Sometimes it's in the middle of the month of November, but we're looking for a catalyst here. And I think a strong candidate for a catalyst would be the Fed rate decision next week. Maybe they don't cut rates, right? That could immediately cause some revisions, downside revisions for a lot of stocks. And that could trigger a pullback in the market. And that would reevaluate the valuations of a lot of stocks. And so that is why I look at next week. It's going to be pivotal. And so keep an eye on that 683 level. If we cross above the 683, it invalidates this level here. And that would give us more room to believe that wave 3 could go higher, even beyond this 1.618. That's why we have to take a look at other targets. And I will be gauging this market next week and try to highlight where I think the S&P 500 might conclude. And that would then just set the stage for a pullback. And we will likely see that 8 to 10%. I am strongly very bullish here. We bought the dips here. We bought the NVIDIAs. We bought all these stocks and we're riding along here. And so we want to protect our gains too. And so that is why we look at this as a potential target here for wave 5 to conclude. And we will be entering again. And with that is why we also look at this 233 EMA to be tested before we set the stage then for another minor degree to begin, and that will give us a strong new buying opportunity. So I'm going to keep you guys updated here. I know this video is a little bit long here for a SPY or an S&P 500 video. I'm going to be more sure what's going to happen next week, maybe on Wednesday, after that rate decision, take a look at how volume has been piling up. And speaking of volume, I mean, take a look at this. This is if you take a look at the sellers here, the sellers are the yellow line here. Look at the development here for the sellers. The sellers have been piling up right here. We have seen sellers coming into this market despite the market going up. And so that's also a sign of a negative divergence. So it could be that institutions are beginning to unload here while the retail, they continue to pile up. Now, retail always buys at the top. They buy at wave 5. That's what retail does. 90% of all retail, they buy at this area here. So they're going to pull the trigger on them. And so we have to be mindful where that trigger is. So we're going to be looking at the catalyst for next week. I'm going to keep you guys updated. If you haven't already, you can follow me on X. I'm pretty much active everywhere, but my main account is on X. And subscribe to the channel if you haven't already. And I'll see you guys in the next one. Have a great weekend. Happy Friday. And I'll see you in the next video. Take care for now.